Hello, and welcome today to another session by Outdoor Wilderness and Learning. Good morning, everybody. As part of our effort to help individuals and organizations make sense of this uncertain world and the consequent pain and opportunity that this pandemic has brought upon us, we are conducting a series of one-on-one interactive talks with eminent speakers and personalities who share their perspective on business and life. As you know, that today's topic is equity market outlook in a post-COVID world. It is my honor and privilege to introduce our next speaker, Vikram Kotak, co-founder and managing partner, ACE Lansdowne Investment Services. Vikram has over 24 years of experience in financial markets across segments that include fund management, fixed income trading, and corporate finance. He has successfully set up businesses and teams in equity and fixed income segments. Vikram, during his stints with Deutsche Asset Management Company, as well as Birla Sun Life, served as the Chief Investment Officer, Equities. He was instrumental in the exponential growth of assets under management during his tenure. So let me welcome Vikram on today's one-on-one session with us. Good morning, Vikram. How are you today?
I'm good. Morning, Rajendra, and morning to everyone at OW and all guests. Thank you.
Yeah, so it's a pleasure to have you on our chat show, Vikram. And one is, before we start, I'll request the audience, you can put in your questions on YouTube whenever you feel like, even during the session. Vikram will do his best to answer as many questions as possible. However, please note that stock-specific questions cannot be taken. So, Vikram, looking at the situation today, what's your view on the world post-pandemic, and what are the key emerging trends that you see?
Sure. Thanks, Rajendra. Also, I'll make one more disclaimer before we start that my views are personal and may or may not be in resemblance with our organization, which is a Lansdowne Partners, a European firm. So I just want to first. Yeah. I think it's a once in a lifetime crisis for us, for sure. I think in my career of 24 years, I'd seen close to 4 crises before this. One is a financial crisis, which is the so-called Lehman global financial crisis in 2008. We had seen Iraq war, we had seen Southeast Asian currency crisis, we had seen 9/11. But what's the difference between that crisis and this crisis is clearly that has impacted a particular society, segment, or country. Whereas this crisis has impacted the whole humanity. So 95% of the world, which is under lockdown for a few months, and I think it's impacted directly, indirectly everyone, every people across the earth. So I think that's a very difference between the 2 crises, which was earlier and now. Second, very important is that unless we find a vaccine, which is I'm hearing a lot of Shah on the vaccine finding, and we are at a very advanced stage. There are 2 things about vaccine. One, we need to find a vaccine. Second, we need to create a volume of vaccine because there are globally so many people are impacted by the COVID. Third, very important, it should be affordable. Till time we don't achieve these 3 aspects, I think we need to really wait for the vaccine to come, and we have to live with the COVID world, and it's part of our life cycle right now. We can say that. Talking about the trends which Rajendra you mentioned about, what are the key emerging trends? A lot of trends which were anyway happening in the world for a long time, but it is kind of pace up because of the COVID. So one of the trend which is digital transformation, which was anyway happening for many years. People are buying e-commerce, people are buying groceries, everything on the online, but that has not picked up. But I think post-COVID, that's become a habit as a part of the human cycle. So I think that's one big as I'd seen happen. Second, very, very big change is people have started saving more, and government has started borrowing more and spending more. I'll give you an anecdote to this. US savers, US retail savers, used to have a 0 savings rate in 1980-81. This saving rate has moved from 0 to, at the end of 2019, to almost 10%. And today it has moved to 32%. So I'm saying someone who was saving 0 in US, today saving 32% of his money. Maybe it's because of pandemic. But my firm view is that the saving rate in US will always remain around 12 to 15%, which is a very, very high saving rate for US kind of economy. So I think that's a one very, very big trend which is happening. Second, our life is now full of OTT, equity trading, and online gambling. online gaming and gambling and all that. In the light of COVID, people don't have the casinos, people don't have the bet on the sports like US. You see basketball bets and football bets in Europe. There's no betting happening, there is no casino happening. So in that scenario, people have resorted to the online gaming or online gambling, which includes online casino and online equity trading. So I always say people that those who don't understand market and they come to the market and buy and sell stocks, they do actually gambling because they don't know much about the market. So they are very, very kind of impacted by the risk or impacted by the volatility which happens in the market. Coming to the online gaming, I'll give you example of one game called Ludo King, okay, which is the Indian made game. I played few times and I'm really fond of that game. They make every day $2 million. Sorry, every month they make 2 million. I'm sorry, $25 million every year. The income is just an Indian app by one man. It's a gaming app, makes $25 million from nowhere 6 months back. So I think that kind of change which has happened in online gaming. We know OTT, more or less, we all know that all the movies are released on OTT because of there's no theater. And I think this is going to be a habit going forward for all the small budget movies. You'll find OTT as a platform, and all the big budget movies will find theater and the vast exhibition as a platform. So I think OTT is the second big trend shift in this era. Third is the equity trading. I lightly always say that when your watchman comes and asks you, sir, kaun sa share acha lagta hai? When your peon comes and asks you, or your mother-in-law comes and asks you that what to buy, you should be very, very careful. And this is a trend right now because everyone is free. Every guy is sitting at home and is trying to kind of play markets. So I'll give you example of one of the kid I know. He's 17-year-old. And he asked me one day, Uncle, RBI kitna repo rate katega? So I say, what is repo rate? He said, that I don't know, but kitna katega mujhe batao. So, this is kind of knowledge. And it's a very bad habit, unfortunately. It's a kid who is 17-year-old who want to trade in the market. So I think it's very, very important to kind of keep ourselves in that control, because equity is not about trading. Equity is about sadhana. Equity is about passion. It's all about learning, understanding, and kind of keep on learning over a period of time. That's the other trend which is shifting. The other which big important trend is happening in the world is E. E is part of our DNA. E is part of our life, whether it's e-commerce, e-work, e-learning, e-education, e-sports, e-health. Everything is just going to shift ourselves from P to E. So people are moving from physical to E. So I think that's going to be a trend for some time. It will change for sure, but will not dramatically change, because I'm seeing a lot of impact on the people's mind on the spending side, at least for a couple of more years. Important trend is WFH, which we all know is it's a very fancy word right now. But I see a lot of merit in that, because many financial companies, many IT companies are looking at how to create a WFH or remote work as a long-term platform, because it saves a lot of money. It saves the rental cost, it saves the maintenance cost, it saves electricity cost, and it saves the time of commuting for the person. If someone is staying in Andheri and going to Churchgate every day, or someone is staying Borivali going to Vashi every day, it's a big cost. It's not easy for people to commute 3 hours, 4 hours in city like Mumbai or Bangalore or Delhi or Calcutta, wherever you stay. So I think that's going to be one big change. So WFH is going to remain prevalent in my view. It is not about pandemic. It is a shift in the mindset of people, shift in the cost structure. And I think at least 1/4 of the Indian job will move to WFH even in the long term. So not in short term. Short term we are all WFH, but in long term as well. I think 1/4 of the job which are not required to you to be physically there in a plant or a factory or office, I think they'll all shift to the home. So I think that's going to be a big change in the cost structure of the people, and a lot of savings in terms of time and efficiency and productivity. The next big trend which I think is going to happen is the huge amount of spending on the pharmaceuticals, healthcare, and telecom. Across the world, barring a few economies like Singapore or Hong Kong or some of the European economies like Italy and Swiss and Germany, world health infrastructure has been very, very poor. It's been underspent, it's been underutilized. So I think a lot of money, a lot of care, a lot of focus will be for every government is going to be on the health infrastructure, which includes US and UK and many more larger countries also. So I think a lot of money will be spent on the health infrastructure, with some vaccines, where there's vitamins, but everywhere, individual, we all spend money on our health, on taking care of our important according to me. Global China trade war and post COVID, we're seeing the impact on the UK-China relationship, India-China relationship post this, border war. So I think I'm seeing that there's going to be a big move towards a deglobalization. So the world is going to move from globalization to deglobalization. Now, will it happen in the parts? Will it happen in a big way? Efficiency like food and pharma and something like that. So in the lies will be more by Modi ji. I think it's going to be a very important vote bank game also. So I think we'll see a deglobalization as a most important trend in the world.
Yeah. Excellent. Some of the key things which you said was so important, Vikram, wherein you said more and more youngsters seem to be rather betting on the market, or punting on the market. So is there, there was a question from somebody immediately, Mr. Das. He says that there have been a huge increase in new demat account openings. Is that true? It's happening?
Yeah. It's across the globe. I think it's happening across the globe. It's all because we have a lot of colleges are not there, universities are not there, kids who are studying abroad are all sitting here, people are not going on a job, they are operating, most people are operating out of home unless they are day-to-day workers. So I think it's a habit which is cultivating in our mind. I hope we control this habit, because it's very easy to kind of get into this glamorous so-called equity game. But you need to have a lot of time, a lot of learning has to be kind of to be done. If you look at a retail, like someone asked a question, if you look at a retail turnover to institution turnover, I had not seen this kind of frenzy post .com bubble. So today the retail is almost half of India's turnover, versus it used to be at 10-15% in last 10 years. So I think there's a big shift in the retail market, and a lot of people are trading, a lot of people are buying, selling themselves. With COVID, something also is important, that a lot of stocks have moved up 30, 40, 60, 100%. People are getting free something, okay, this stock moved up by 70%. I could have put this. People are actually kind of getting lured by that, what to say, called speculative mind. I can also make 20%, I can also make 100%, 70%. It's not an easy game, but yeah, it's happening.
Yeah. Vikram, just a quick check, a tech check. Just check if the internet at your end is an issue. So you can shift, because your video was freezing. Yeah. Sorry, viewers. Yeah. So. Yeah. So I think no problem. So there's been some tech issue. Vikram will come back live. He's already back live. So we asked him to shift his Wi-Fi connection. So this is what happens when everybody in the world is using the Wi-Fi and the bandwidth is really limited. This is one industry where a lot of investment needs to be made, and in 5G.
Yeah, I think there's some issue. There's some cross connection of Wi-Fi. There's multiple connection of Wi-Fi happening.
Yeah.
So that's a sad part of the technology, Rajinder.
Yeah, 5G. Vikram, can you put on your video? Because now it's better. Brilliant. That's what I was telling, how much 5G we need to invest in, and because we are consuming bandwidth like crazy.
Yeah.
People are watching movies at home, Netflix, everything, shopping. And
you can't survive without data and power today.
And healthcare. What you brought up, an important point, is healthcare is where globally large investments will happen. And everything is E. So moving on, you raised some important points, about deglobalization. Will it really benefit or impact economies and consumers? Like if you look at something in terms of how the US or China global war is, in terms of trade war is happening, will it impact positively to economies like India? So, I mean, it's a big question mark to a lot of viewers like us.
Sure. I think that's a good question, Rajinder, to ask, because globalization, I thought, for last 3 decades has given a lot of benefit to the world. The benefit is maybe quantifiable. Some benefits are non-quantifiable. Let me get into a couple of benefits of globalization, both quantifiable and non-quantifiable. Quantifiable is world has done the cross-border trades, which has benefited a lot of countries, a lot of countries who have surplus goods, a lot of countries who has a less scarcity of the goods. I think there's actually a great trade happen. Second, it impacted positively, qualitatively, is innovation. Innovation has helped across the globe. So whether Amazon is formed in US or Facebook is formed in US, it's benefited the whole world. And third, very important, is also help the diverse culture to come together, because otherwise you don't know who's a Brazilian guy. And like I was in Wharton for a leadership program, and there are almost 60 countries representation was there in 180 member class. So I met a guy from Cuba, which I never know. I met a guy from Turkey. I met a guy from Brazil, or I met a guy from Mexico, and many from US. So I think it's very important to kind of the globalization helps you to create a diverse culture. Unfortunately, as I told you, the political vote bank and things like that, and election around the corner in the US, I think a lot of America first, a lot of Atmanirbhar Bharat kind of campaign has started, which in my view will have a lot of short-term costs. It's not easy to move from globalization to deglobalization. But what's going to happen is going to slowly pace in our life. So as I told you, with the starting with the necessities day to day, like food and pharma, people will try to kind of self-dependent, because you can't depend on the other country. Like this virus came, tomorrow pharma supply can impact particular country, your cost can go up in a big way. So I think what's going to happen, people are going to focus on more low-hanging fruit, and try to shift their base from one country to other. So a lot of fight right now happening in the China and US. My own view is that a lot of factories from China will move to US in long term, and it may not move to US because US is a very expensive place. What can happen? It can move to the place like Mexico or Peru or Colombia, which is near to the US. So what happened? They don't get disrupted by supply chain, and also those economies are in the control of the US. So I think that's going to happen slowly, whether it's healthcare, whether it's the manufacturing, whether it's the food security. So a lot of things are going to move there. Otherwise, the cost of manufacturing locally is very high. Today, China is a 2/3 of the world's factory. So 2/3 of the raw material consumed by everyone in the world is produced by China. So it's not easy to, discard China. It's not easy to take China away. But the tensions are building up around those, that whether UK or Europe or Australia, India, everyone is clearly in a support of banning China stuff. And we are seeing a lot of movements in India recently. Like yesterday, there was an announcement that we can't import TV and TV components from the China. Now that's a huge industry. So it will have a lot of negative impact in short term, Rajinder. One is job losses, because a lot of people are dependent on this business cycle. Second, the cost of manufacturing goes up, because suppose you are not manufacturing TV components in India, you start suddenly, first manufacturing, it will have very high costs. These are the initial problems of the manufacturing. But for India, in long term, it can be really a boon, because India is over dependent on many products on the global markets. Like our 25% of pharmaceutical raw material come from China. So it's actually in a long term will be good for India, because we are a large economy and we are not very rich economy where we can afford any price. So in long term, the deglobalization will to some extent benefit India for sure, subject to we efficiently improve our infrastructure, whether it's a physical or social infrastructure. Also, one important thing, what we can't deglobalize. What we can deglobalize is clearly a food, manufacturing, pharma. What today we can't deglobalize is space activity. We can't deglobalize the internet. We can't globalize satellite communication. This is absolutely globalized activity. You can't say tomorrow that, I don't want to be connected on Facebook, I'll be connected on some India book. I think it's going to change. It cannot change. So some of the things will remain the same. It will not change. But most of things can slowly and steadily move towards a deglobalization, because we all patriotic, we all nationalist people. So 90% of people will love word nationalism or Atmanirbhar Bharat, whatever cost we pay is a different thing. But as on today, it's going to, so short term, it has a huge impact cost on job losses, and it will impact the manufacturing costs. It will increase the inflation. But in medium to long term, the deglobalization will be good for India, not for the whole world.
Okay, great. That's a very interesting point. So India has a large takeaway in the medium to short, long term. That is brilliant, in terms of what lovely the way you put it all across.
Yeah.
Now, this lockdown, it's been bothering all of us. It's been on for 5 months. Yes, we're also doing an online webinar with you. So that's a huge plus point. But lockdown and impact on Indian economy. Has the Indian government done a fabulous job in managing lockdown well in the economic aspect? My question is more from the economic aspect, is that one of the viewers has come up with. What's the lockdown view from the economic aspect?
Point. That's a very good question again, to put it. I think India has done a good job in first lockdown, in my view. They're super strict lockdown, and I think we have been praised by globally everyone. We've not seen many cases happening. And then we had loosened up a little bit, and Indian people, they want to all gather together to eat sandwich, or they want to go to the buying a liquor or whatever. And that has actually started the second round of challenge, and second round of pandemic virus has actually impacted India a lot, in my view. Economic wise, India unfortunately couldn't do a great job. And I don't to fully blame the government on that aspect, because India were anyway in trouble before COVID. So let me give you a little background perspective to Indian growth. India has been growing before Modi at almost 7 to 8% average for last 10, 11 years on an average. 6 to 9 is the range. So we've grown at 7.5 to 8% in pre-Modi era. Post-Modi era, first year, of course, it has a base effect, but slowly we started seeing a dampening of the economic growth, and there are reasons for that. So in 2016, we had demonetization, which has impacted the economy in a big way. There are positives of demonetization, there are negatives of demonetization, but we have impacted in economic terms and job terms and in business terms for sure. Second, we brought the GST, which is one of the finest reform in my view in this country, but in a very rushed manner. We had a strict timeline. We just put in GST without doing the necessity infrastructure on the GST side. And today we are paying a very big price for it. Today, GST should be a great infrastructure, great reform for country. But unfortunately, the compliance, the delay in refunds, a lot of modalities, and also shortage of funds from the government side is impacting the GST, which is supposed to be a best reform in this country, is looking like it should not have been done, right? Third impact, in my view, has been the financial crisis in India, which is created by ILFS and Diwan housing, where a lot of retail people lost their money in the ILFS bond. They're not recovered yet. Diwan housing has not paid. A lot of other small companies have not paid. I think that has also impacted to some extent to Indian, that mindset of business. So I think one by one, the economic, some crisis came, local crisis, and it started like last was NPA crisis of small sector and some of the companies. So this all crisis one by one has started impacting the economic growth. And unfortunately, post Modi era, we grown on an average of 4.5 to 5%. And this is, mind you, on the revised index. So post Modi government came, the revised index, the base year of GDP, by which the GDP looks more inflated. If you do like to like apple to apple comparison, we actually grown at 3.5% in last 6 years. So our growth, which was supposed to be 7.5%, has come down to 3.5%, which is a big challenge for this country pre-COVID. Forget about COVID. So last quarter of GDP, March before COVID, we grown at 4% on a revised base. So India was anyway doing very bad pre-COVID, and post-COVID, what happened? We got one more blow because lockdown and the economic activity stopped. So economic outlook of India is very scary right now in the short term. So let me give you some of the analyst expectation, and we also feel internally that India this year in the financial year 2021 can degrow between 5 to 9%. I'm saying degrow between 5 to 9%. Now this is shortly because of pandemic. We can't completely blame the government. It's all because the activity has been stopped, and government is not blamed for that. But next year, after this year, because of the minus base effect, negative base effect, we actually can grow between 8 to 10%. This is FY22, the financial year 2022. We can actually grow at 8 to 10%. Now we can't be happy about it fully, because 8 to 10% we are going to grow only because of the base effect is negative. It is not because of the reforms taken by the government as on today. So it's only a base effect, which is good. So it's like that today, Maruti, say in last April, Maruti sold 10 cars. Next year, they sell 1 lakh car in the same month. The growth will look very big. But 1 lakh is a 2018 number. So it is not a growth for Maruti, but for year-on-year comparison, it's actually a growth. So in a way, we'll grow at 2022. Now, the biggest question to ask is, can India get that glory back and can grow at 8%, 9% every year sustainably? I think that's India's base case scenario. In my view, India easily can grow between 8 to 9% if government can do a lot of reforms and which will change the outlook about India. Today, India is suffering from the lower foreign investment. India is suffering from the, barring Geo, which got a lot of money last quarter, nobody else has got money in India. So India is suffering from lower foreign investment. India is suffering from a lot of lack of confidence, business confidence from the Indian corporates itself. So I think government need to kind of really take this on a serious note and really start working very hard on this reform aspect. India, unfortunately, we don't have money in our balance sheet, so we can't spend too much as a country. But we can at least do some of the basic reforms, which is you don't need money. So, for example, we are like individuals pay huge amount of tax in this country. So I'll give the example of new corporate who set up the unit in India has to pay 18% tax, whereas individuals pays 43% tax to those who are salaried. On and about that 43% tax, we end up paying GST, we end up paying excise duty and cess on the petrol and diesel. So actually, an individual spends 64% of his money in the taxation in this country. So I think that's huge number. Now, and that is 64, and on the other side, you have 18% by the corporate. So there is a big arbitrage between two areas. So they need to reduce the taxes for individual, in my view. I know that it's very bad reform to talk about because we don't have revenue anyway. So very difficult to say this, but this is a very bold step you need to take it, which will also improve the tax reforms, which will also widen the tax base. Because a lot of people today don't pay tax because of higher tax rates. So there's going to be the arbitrage will stop between the corporate and the individual. That's the one thing they need to do. Second, in my view, the biggest challenge for the country is unemployment. Today we are not talking about unemployment, but I think India is actually in the big trouble as far as unemployment. Every year, there are close to 1.2 crore young kids come to the job market every year. Now, this year, if you ask me, who are the sectors which are going to recruit? The only IT and pharma to some extent, and rest all are not recruiting. There is industrial, manufacturing, financial service, they are not recruiting. Who are removing people? We all know. Unfortunately, hotel industry or travel or leisure or auto to some extent. So I think unemployment is a big area of problem for India today, and government has to really focus first on the employment of the people of the country's people. I think that's going to be a very, very big reform which India need to do, other than the education and research and all that. And third, in my view, which India need to really focus is on creating the bringing the business confidence back in the system, because that's where I think the biggest challenge is happening in the business confidence, where most corporates in India today are not investing in their own country. Unfortunately, that's the other thing. And last, sorry, I'm making my answer prolonged, but I think it's very important to put this point. Last is ease of doing business. I think we have really big problem in this country on ease of doing business, whether it's a physical infrastructure, whether it's a social infrastructure, whether it's a laws. I think the compliance is over in this country, unfortunately. Labor, we have 468x. Manufacturing, we have 472x. Taxation, we have 300x. I don't think any CA can. I'm a CA. I don't understand any of the act, because all acts are overlapping. So I think we need to really work on this and really bring the ease of doing business, both from compliance point of view. Like GST is a big compliance challenge. And second, we have to also bring ease of doing business by creating more ports, airports, infrastructure, road. I think that will bring a lot of money in this country. So I think this is what we need to do to really go to that sustainable growth of 7-8% for next 5 years. Because otherwise, it doesn't make sense that 1 year you're -9, second year +8 or +9. It doesn't make sense.
So, but the excellent points that you made, right, about the current state of the economy, where the pandemic, is something that nobody could have predicted, and no government could have managed it. And the Indian government seems to have managed the lockdown exceedingly well, as compared to the other countries. Though, we are part of the society and we see how indisciplined all of us can be. And there is, of course, we are a heavily populated country.
Yeah.
So, but going forward, I mean, 3 to 4 years hence on, you see, say 4 years hence on, a good growth rate for the Indian economy?
Yeah, I think if you do this reforms, I think really important is to really focus on reform. I think we are not targeting a lot of basic things. So I'll give you example of US, and I'm very fond of US all the time in my life. Uh, so many large companies in US are funded by the research. So Cisco has been funded by the research, university research. So we don't have that culture in India, unfortunately, where we promote research. There are very few handful of companies really doing research only in the pharmaceutical area. But I'm not seeing, or biomedical area, but I'm not seeing research across the board. We need to have research across the board. Today, India cannot manufacture a copper tube. You need to really focus, how do we manufacture a copper tube? A TV screen which you get is not a single manufacturer in India today. So I need to, every area we need to really work on innovation, work on research, work on education. I think education is a big look in India. And we need to work a lot on micro issues and macro issues, and then we'll able to see this sustainable growth. Otherwise, Rajendra, I don't see we are going to grow beyond 4, 5, 5, 6%, because which is the base growth. I'm saying you do nothing, you still can grow at 6%, because this country's base is such widen, consumption is so high, population is so high. So 5.5% is a given for any country like us at this demography or at this diversification. But unfortunately, our merit, our what to say, the aspiration should be 10%. 8-9% is very easy to grow at this base and with a lot of support. So I think we need to really think of 8, 9, 10. Then only we'll see a job creation, prosperity. I think a lot of policies required by the government and a lot of less of compliance required by the government. They need to work on a lot of micro things.
These are very interesting takeaways. You know, what you said about the universities funding research, the universities funding Cisco.
Yeah,
This
so
is
many
just,
companies.
yeah, it's,
US, I think there are 200 companies, new age companies are funded by the research. They didn't have funding, so first funding is given by the to entrepreneur by the
entrepreneurs.
universities.
Yeah,
Yeah,
this is
yeah.
this as a culture needs to really, really step into India.
I'll also tell you one more thing about Indians. Indians spend, you know, how much money every year on their kids' education abroad? Seven and
I
a half
mean,
billion dollar.
that's a huge number.
$7.5 billion Indians spend every year on the education of their kids abroad, and of which 80% or 75% is in US. My kid goes to US, you know that, right? So I'm just saying that this kind of money, $7.5 billion, we can create 100 universities in this country properly. And with the help of Stanfords and Virginias and the Purdue's and the Cornells of the world. But I think we are not even moving towards that aspect. Our education system, unfortunately, is still a teacher-centric education system. We are not still moved to the student-centric education system. Now we are thinking on those lines. We are copy-pasting the China and copy-pasting the other part of the world. But that doesn't work, because you need to execute. Copy-paste will not work.
Yeah.
So I think a lot of work need to be done on the education side, research side, and a lot of micro areas, because unemployment is going to challenge a big way, Rajinder. If we don't tackle this unemployment, we'll be Vietnam and Taiwan of 70s, where you will have a social unrest, where you can't, a richer guy will not able to send his kid outside because the guy is waiting outside to kidnap him. I think we don't want to go into that scenario, unfortunately. So we need to tackle this problem in next 2-3 years time, unemployment problem. And also pandemic has created a lot of unemployment in service sector. We don't see that, but you know better, Rajinder, you are from that sector. That is going to create a lot of unemployment going forward.
You made some very, very valid points, and about specifically about sectors which are doing well, and specifically where we need to, or the Indian government really needs to address certain points. You know, there are some really good things the Indian government is doing, and there are things where they really need to improve and create a powerful impact.
Yeah.
So I remember you said sectors which are doing well or which will do well from here on. One is healthcare, other is education, or you could rather call it edtech, and pharma, which could be a part of healthcare or is completely different. What are the sectors going forward you think would really grow and most likely to benefit? So this is from the point of view of viewers who would look at investments in particular sectors and industries. They could really get a fabulous insight from you.
Yeah. I think the digital transformation is the name of the game in the world. Automation is the name of the game in the world. And this is happening for last many years. Whether you look at the taxis, the way taxis have changed, the hotel bookings have changed, the way theater bookings have changed. So it was happening anyway. Now it is taking a pace. Like I remember Satya Nadella of Microsoft said in last meeting, last quarterly outlook, that what we've done in last 2 months is equal to work of last 2-3 years. So I think that's a correct. I think that's what is pandemic has actually speeded up the process of digital transformation. So I think one sector which is the most benefited and most benefiting and will most benefit going forward is IT. So IT will have a lot of levers because a lot of companies will try to cut down the cost on their internal departments and focus on more on the automation, digitization. So IT will be a big area of focus. A lot of online commerce will ultimately need IT support. So IT is an area where I think from Indian point of view, is doing very well right now. And of course, I'm doing this in August, your webinar, but I did first in July, April, and my view is same from that day till today, that IT is going to be the biggest beneficiary for Indian point of view from this pandemic and otherwise also. Second, the pharma, you rightly said, pharma and healthcare will have a huge positive, and which we are seeing again the impact of pharma and healthcare, because a lot of money is actually going to be spent on the health and the focus on health, which people are not doing. Insurance also in some extent comes in that area, because a lot of people are not in India buy term insurance and health insurance. A lot of people are going to move towards buying term and health insurance, or those who are underinsured will try to kind of see that they are going to insure more. So that's a one more sector. Consumer discretionary, which is you need to kind of buy. Sorry, consumer staples will continue to do well. Groceries and the basic stuff of home will continue to do well. They are doing extremely well right now. Will continue to do well. The other thing which is doing well in India and which will also continue to do well is rural, because we have a very good sowing season. We had a good monsoon. We had a good rabi crop. So I think summary is that the rural related activity, whether it's agro inputs or tractors or two-wheelers, will continue to do well. Coming to the sector which will start doing well post lockdown completely open. So today we are under lockdown still partly, but once you see a lockdown completely open, the supply chain issues are getting solved, the demand cycle start improving. The sectors which will improve immediately after that, like a two-wheeler will improve, tire replacement will improve, home building will improve, like cement or paints or ceramics, tiles, etc. That will improve post that. Then you will see a lot of some outing will happen, so people will go into low end restaurant like McDonald's and Domino's and all that, so they will start seeing some benefit because of economic activity will pick up. You'll see a lot of high quality banks will start doing well. I'm not talking about every bank, but high quality banks. So there are sectors which will do very well once the pandemic ends, or once the lockdown ends in the economy. The sector which I think will take longer time than usual, even after the lockdown opens and economies start coming to normalcy, the one sector which will have a huge impact is the commercial real estate, because as we discussed WFH, a lot of people want to give back their rental properties to the system. Having said that, some of the people are adding up the properties, but I think net summary, we'll see a lot of impact on the commercial real estate, particularly rental yields and the prices on the commercial real estate. Secondly, leisure, travel, hotels will take some time to recover, because people will first come out of the shock, and a lot of psychological change in the behavior of spending also is going to happen. The trucks, the motor cars, people say that social distancing will improve the demand for motor car, but I think it's all about propensity to spend. So I think it will have a huge impact on motor car because of three reasons. One is clearly the spending capability. Second is WFH will reduce the need to travel for people, and a lot of people have more than one car. So I think they will not try to kind of spend more incrementally on the car. So car will be one area which I'm a little worried about. The car industry will take time. And also we have a lot of innovation in the car industry where people want to kind of, buy less cars, but try to have the high quality or good cars. So this is what I think is going to take time. Infrastructure will take time unless government, to ramp up the infrastructure spend and the reforms. Otherwise, infrastructure will take some time to kind of come back. So these other sectors will take some time to come back. I have a different view on the residential real estate. It may fall in short term, but I think it's a very good investment opportunity if you have a 5-year, 10-year view on the buying one more house. I think residential real estate, because India is a short of real estate finally. So residential real estate can actually see a very good deep right now, but then they'll kind of recover the fastest among the all in the sector which we don't like. So that's what my view is.
a technology, what he said, was something which will really grow. AI could be a part of it. Education, ed tech or education, healthcare, pharma, and you've outlined other sectors, like you feel that it will be residential real estate, which will see a big boom, while infra, hospitality, travel, and F&B post-COVID may take some time to really pick up. So, plus we have some interesting question. There is viewer Darshit. He has placed a question. Do you think that the Make in India project by the government would be successful in the long run?
Yeah, I partly addressed that, Harshit, by saying that we need to work a lot on our laws, our legal contract system, our labor laws, our ease of doing business, infrastructure. I think we are very far from becoming someone like China. I think we are very far. We are not even 10% of what China can do. So I'll give you example of like Apple. Apple almost manufacture 80% of their phone from China till now, and China makes only 5% of that profit. And Apple makes most of the profit, maybe 50-60% on that. But still, China can produce in a scale with a quality at only 5% margin, because they are such a large factory, and their infrastructure is fabulous. Their power supply, their laws are very clear. I think there's a difference between the two countries, and also the mindset of the people. So I think we have a long way to go before we become a Make in India successful. Because last 6 years I'm hearing Make in India, but we are not seeing a large benefits of it. Maybe now, because of the anti-China move, we may see some emotional move by the Americans to India, but that is not going to be a fundamental move. So I think we'll take a long time before we become a China or Make in India be successful. Because I find government a little confused whether you want to be Atmanirbhar Bharat or you want to do Make in India. So it's actually a very confused state of mind. If you follow Atmanirbhar Bharat, then a lot of foreigners will say, why should we produce in India? We'll produce in our country. So I think it's going to be a tug of war or tussle right now in the minds of regulators or the corporates or the policymakers, that whether to go for deglobalization right now or I think Make in India. But Make in India, in my view, is a long-term story. But we need to do a lot of patchwork, a lot of hard work to get this large pool of money, which is actually sitting outside very easily. It's a low-hanging fruit. So India can easily bring 200-300 billion dollars of FDI in manufacturing if you open up properly.
Yeah, brilliant. But like you agree, we are seeing green shoots. It's a good move by the government in the long run. If what you said is the kind of steps that they take, it will pay off.
Yeah, green shoots are happening because we are opportunists. We are seeing opportunity and we are trying to address the opportunity. What we need to do is a university research. Opportunist mindset will bring some short-term money. But if you create a long-term pool, I think that will solve the problem of the country. What America has done smartly is they've created long-term pool. They've created the ease of doing business long back. Like you are in travel, Rajinder, and I remember when I used to go to France or Germany or anywhere, they'll give you only 5 days visa or 4 days visa because the travel time is 5 or 6 or 7. US will give you 10-year visa. Go enjoy what you want to do. I think you need to have that openness. I think no country like US in openness. US is very open country. It has a diverse culture. The Facebook guy is non-American. Amazon guy is non-American. Satya Nadella or Sundar Pichai is non-American. They are richest people. They are running richest company. I think you need to do that. Atmanirbhar Bharat will not solve us, because if Lever says I'll bring a foreign CEO, we'll have a problem. We need a local CEO. So I think we need to fundamentally change, Rajinder, instead of doing this patchwork and green shoot. Green shoot is a great word, but I believe the short-term story can be compelling, but long-term, the problem is long-term for country, not short-term. Employment is a big problem. Education to everyone is a big problem. Poverty removal is a big problem. I think we are not yet reaching there. We are nowhere near to understanding that challenges. We are right now focusing only on the, why China opportunity, le lo, utha lo, isko bula lo, isko bula lo. No, that's not a correct thing to do.
I mean, really valid points, and very incisive point. There's a lovely question from Imanshu. He's saying whether one has to invest in equity markets right now, as valuations, are they overstretched? There is ample liquidity because of US market. That's what he's saying. And companies are not doing well. Banks and NBFC are looking at large NPAs in the coming time. So shall we invest in the market now is his question. Yeah. This is from Himanshu.
It's a long answer because I don't believe in investing in one asset class from years and years. When I become CA in 23 year of age, I followed the very solid asset allocation strategy in my life. It's a very disciplined approach from day one that you can't have all your eggs in one basket. If you have 100 rupees, you need to allocate to 4 big asset class, which I had always done and I continue to do today also very, very passionately and very, very with a lot of discipline. So it's a equity, it's a real estate, is the bank deposit or debenture or bond, whatever you understand. And last is the gold. Gold may not be a big portion of your portfolio, but you need to kind of create allocation. I'm giving a little long answer, Rajinder, and maybe that's a very important for all the viewers, that asset allocation is, in my view, is the only mantra to survive in this world. Because last 5 years, if you look at equity market in India, a best of the equity mutual fund has only given 4 to 5% return, and they charge you 2% of fee. So net return for the investor is 3 to 5% range. Now, 3 to 5% cannot cover your domestic inflation, right? Whereas gold has given over 20% CAGR in last 5 years. But if you look at 20-year scenario, gold might have given equal return to equity, or 30-year equity is better than the gold. But you need to have both asset, because in a year where the asset class is doing well, if you don't have that in your basket, you will do badly. So it's better to have a very judicial allocation of assets which you have to kind of deploy. Coming to the answer on equity, I think equity investing is the process. So whether markets are expensive or cheaper, if you're investing for 10, 15 years, it really doesn't make a difference whether the valuations are 25 or 23 or 24. For the normal investor, I'm saying, for people like us who are full-time in the market, may take that view that, yeah, I don't want to buy for next 3 months or 6 months. But generally for the people at large, I believe that equity allocation is a must for everyone. And my thumb rule for equity allocation is, Rajinder, 100 minus your age. So I'll give my example. So say I'm 48. So 100 minus 48 is 52. So my today's equity allocation should be 52. And actually it's a 53 right now. So 52% of my money should be in equity, and rest should be in such a way which depend upon your requirement of the spending. So if you have more short-term spending, put in FD or liquid. If you have more long-term approach, you don't need money immediately because the income stream is good, put in real estate or in a gold. But you need to allocate to all the basket. So you need to have very important, gold is very important part of our portfolio. And I believe gold as a asset class has done so well till now. And I'm always advocating gold for last 15 years. And today also I believe that gold can deliver 10% CAGR from here also. And smartly, our housewives have done great job, Rajinder, you know that, right? I think they have been compulsorily buying the gold and pushing us to buy gold. And we, with a half-hearted, we allowed them to buy more and more gold. And today, I think that's a very big saving grace for us and for the country as well, country at large. So asset allocation remains a critical focus area, Himanshu, because I don't think so buying equity or timing equity will help normal people. I think a market expert can do that to some extent with some failure, some positivity. But normally, to people who are non-finance professional, my advice is one line, that follow asset allocation, invest regularly. I don't think so there's anything else we can do.
So these are brilliant investment mantras for non-financial professionals like us. What you said is have a diverse asset allocation, do have equity, do invest in gold and in fixed deposit or in debt instruments. And plus, just to follow up on this, there are, there's Neelam and Himanshu again asking, Neelam is asking that what explains the rise in the share market despite the economy not doing well? And Himanshu has a follow-up kind of a question. What happens when liquidity is pulled back? Can India withstand? So is this liquidity coming from outside India, or is it the within India funds that have been deployed in the stock market? So please, over to you.
I think you're right, and that's a very good question. That is actually a liquidity-driven rally, not a fundamental-driven rally. What people are trying to discount is that COVID is a short-term shock, and will come back in FY22 with a big margin, which is correct. But problem is the structural story. Structural story is really weak in this country. So I am fully with everyone that it's a liquidity-driven rally, and when the liquidity is pulled out, which will happen someday, because it's a musical chair, right? Someday it has to stop, or it's a party which is on. The final guy will pay the bill. So those who are left out will end up losing a lot of money. I remember dot-com bubble. I remember the Darshit Mehta crisis. I remember many more other crises. And I think people have paid hefty amount of money, hefty amount of price. 2008 crisis before Lehman. The so-called Reliance Power IPO was a darling of the whole market, and today Reliance Power is 3 rupees, right? From 100 and whatever, 150, 60 rupees after 12 years of investment. So if someone has really invested long-term in Reliance Power, he has lost his shirt, pant, and house also. So I think it's simple that I both agree with Neelam and Himanshu that it's a liquidity-driven rally. There is no fundamental cause of rally, but I think this is a integral part of the market. A liquidity is an integral part of market. They can actually take you anywhere. So today people are buying Hindustan Lever at 70 times or Bajaj Finance at four time book value, which we are not seeing. It's because of liquidity. And when you see the fundamental, that's why the long-term investing takes a very big role to kind of keep your patience and keep on buying at all prices. So what happened that you don't need to time it, because human psychology is very different, where we think it's expensive or cheap, but we don't see from the overall perspective, because I also feel this is expensive, but it can actually have two more legs and it can get more expensive from what it is. Like I remember Tesla, I was reading an article by one of the large hedge fund manager. He was short Tesla 3 years back. And at that time, he said Tesla is a bubble. Today, the Tesla is 30 times up from there, and he has lost his short print. So, expensive or cheap is not, it's very, very subjective. It's not very, straightforward answer to that. But I think markets are driven by liquidity. And as I told you, 17-year-old guy talks about repo rate, or, people who are not even connected to stock market ask me, should I buy Yes Bank IPO or not? Those are not connected. So one of my ex प्यून asked me, sir, ये यस बैंक का आईपीओ 12 रुपए में बहुत सस्ता मिल रहा है, पहले तो 400 रुपया था, अभी ले लें क्या? So if people like them start talking about stock market without applying their brain, I think it's not a good sign for a country, and because everyone cannot come to stock market. People have to have a diverse business interest, otherwise all will become speculators and gamblers in this country, which is a very bad sign.
Definitely. So for some key takeaways for non-investors like us, if you would highlight, top 5 sectors that people should invest in, and like you said, keeping in mind your mantra that you may not always be able to purchase stocks at the lowest price, though the markets are priced high, you exercise caution currently. But what are the top 3 or 5 sectors you think people should really invest in today?
So I mentioned that, I clearly mentioned that IT and pharma is a big sector. Rural theme is a big sector. India is all about demography. So we are going to consume, and more consume. So consumption in every area. You might have a short-term cyclical problem with the leisure and all that, but ultimately consumption will come back. Whether it's a hotel, or whether it's travel bags, or whether it's ceramics, or I think consumption will come back. People are going to spend again. So a very long-term investor can take a very contrarian view today to buy a hotel slowly. May not pick up in next 1.5 years, but if you're a 10-year investor, you can make brilliant money in the hotel business. But today you have to take a call with a patience, with a keeping in mind that I may lose first 40% or 50%, then I make 2-3 times or 5 times or 10 times. So a lot of people take a contrarian call right now. So my advice to people is to kind of create a nice basket of sector. And sorry, the main point, which is very important, that a lot of people should not try to come to the market itself. Go to the mutual fund, large cap mutual fund, a good quality mutual fund, or buy ETF, because you are at least getting index return. So that's very important if you don't understand. If you understand, then definitely you can do a better job than others. But for understanding, you need to spend a lot of time on this business, because I read every day 8 to 9 hours on the economy and the global economy and the world and all that, 8 to 9 hours. So I'm sure that someone has to kind of really put the sadhana, or I can say always say practice behind the profession. If you don't do that, chances of staying sustainable, giving sustainable return or making sustainable profit will be very low. You might be lucky once in the cycle, but you can't be lucky every time. Second most important, Rajinder, that even real estate, when you buy real estate, it's not easy game that buy real estate and keep it, and you have to be very careful about documentation and like under construction and which builder is going to survive, not survive. Even debt market. So buying which FD is important. If you could have bought Abhyuday Bank FD, or Diwan Housing FD, or ILFS, or Punjab and Maharashtra FD, or something else, you could have gone haywire. Your money is still stuck. So even buying within the asset class of debt, you need to be very, very careful what you're buying. Anything which tells you that market yield is 6% and I'll give you 10%, your alarm should start. How can someone give 10% in the time when the yields are 6%? And that's what happened to the credit risk fund recently in the mutual fund industry, that they offered a higher deal, people gone for that, and finally people lost their shirt and pant. So I think we need to be very careful, even in the within the asset class, that how to deploy your money. It's a very difficult. It looks very easy, but it's a very hardworking job. It's actually a time-taking job to study, research, to understand what to buy, what not to buy, how to buy, how to invest. It's a very long exercise.
Well said, Vikram. I mean, people who do not have time to do the research or don't understand the stock market to such a very high degree, to rely on ETFs and mutual funds, to invest. Yeah, and there is available. There are some interesting questions coming in, Vikram. I mean, I know it's taken a long time, but there's great questions coming in. There's a question from Pranav. Do dynamic asset allocation funds make sense for common investors?
It's actually a very good concept, Pranav, but I think in a practical parlance, it's not been followed well. Okay, so I think it's ultimately up to the fund manager. If you do one error, your whole allocation gets for the toss. So I think my advice is asset allocation, you should leave it to yourself, and the particular asset management, leave it to the fund manager. So equity, you decide how much you want to allocate, say 40, 50, 60%. And that you give it to the professional fund manager, instead of giving to the a fund like dynamic asset allocation or some sector fund, or some exotic area. Go to the simple large cap fund if you are non-finance professional, and just keep in a highly blue chip companies and see the returns coming to yourself. So keep it as simple as a mantra which I follow, that asset allocation is very important, but within the assets, you give it to the professional fund managers to manage. I don't normally like to go to exotics or the thematic funds, so-called, because they ultimately they have a shelf life, Like I'll give you example of 2000. I remember I had very small money and I put in one fund, 1 lakh rupees. It's called ILFS e-commerce fund. That time, again, Y2K boom was there. I put 1 lakh rupees just because my friend was managing the fund, and I given 1 lakh, and 1 lakh was very big for me at that point of time. And I redeemed after 7 years or 6 years, I don't know how. I got some 19,000 rupees back. So sectoral fund, thematic fund, asset allocation, dynamic asset allocation funds, in my view, it's not a good choice, because it's all up to the you are at the mercy of the fund manager, and if fund managers don't do a good job, then your money is at toll. So I think better to do asset allocation yourself, and within the assets you give it to professionals.
So what you're saying is, it's better to buy a small cap or a medium cap, large cap.
My advice is simple. Large cap to ETF is the best way to play in India, because last 10 years, large caps are only giving returns, and it's going to be the future also, because the bigger is going to get bigger. As simple as that.
Yeah. There's a nice, interesting question from Abdul. Abdul is asking if buying gold funds is better or buying gold itself.
I think both are good, because gold funds are very effective. I have not seen gold fund losing a lot of money, and both are effective. They are also doing the good allocation. You can do whichever way you want to. I think I'm good with both. I normally buy physical gold. I love to keep it at home, and it's in a physical shape. So it's an old saying, that जो सामने दिखता है वो सही होता है. So my mother always tell me that ये शेयर क्या होते हैं, घर खरीदो, because घर तो दिखता है कि घर सामने खड़ा हुआ है. So I'm actually on that camp that you should. I buy physical myself, because I love to see that gold every 3-4 months when I do asset allocation Excel. I say, oh, पड़ा हुआ है, बराबर है, ठीक है. So I follow the old route of buying physical, then buying the fund. A lot of people buy REITs. I don't do REITs. I buy myself a property and I rent it on. So I love to do few things, because otherwise we are very free, right? So I want to do myself. Excellent. But I'm okay with the gold fund. Gold fund is a good product.
Gold fund is a good option. Yeah. So thank you so much, Vikram, for your insightful talk. You have spoken about the sectors that people could park their money in, invest in. You've spoken about sectors which will do well 3-4 years from hence on, like some sectors like hospitality, travel, consumer consumption will really start doing well. after the post-COVID situation in some time. Plus your asset allocation strategy about investing in gold, investing in equity, and you said look at your age, 100 minus the age, then look at if you're confused, this is the amount to put in equity, and your personal viewpoint in actually wanting to invest even in physical gold as well as physical property. However, you also advocate investing in ETFs because it's much easier for a lot of people. So this is really brilliant. One, before really, end the Q&A ends, this is a question which is so important, one key learning or takeaway from you in this pandemic, which is one key takeaway that you can talk about.
So I have two small takeaways. One is I'll talk about, I think it's good you put it here. So that's actually one learning I always got that after pandemic, that I remember I going to a Kirana store in Chembur and getting a last packet of Maggie from him, and there's a queue for Maggie. And that was a big pleasure in driving a BMW at particular point of time. So I think I tweeted this also. It's actual experience. That curve of happiness has shifted from driving a BMW to fetching the last packet of Maggie at a Kirana store. I think that's a big learning for me, that we sometimes miss a lot of small things in life, but I think sometimes that small thing is such a big pleasure, which is much bigger than the billions of dollars at particular point of time. That's one big learning. Second, I think big learning from here is I start realizing the history is more powerful than the future. So I always fan of the future, being a stock market or financial professional. We always love spreadsheets and the future and blue sky projections and sum of parts and all that terms which we follow. But I realize history is very important. I think history, you need to read history. History is very boring, actually. And, spreadsheets are very glamorous, sexy. But history teaches you how to make a spreadsheet. Because if you don't know history, I think you can't make a good spreadsheet. Of course, I always follow, because I work in a credit market and debt market. So I always see a balance sheet very carefully before investing. But I think history is a very critical thing. History about the promoters, history about life, history about everything. Even this pandemic also, if someone has read the history of 1919 Spanish crisis, he could have realized before that, this could have been tackled how markets will fall, how markets can take long time to recover. So I think history is crucial, because projection can go haywire, can go, very fragile. Projection, then future is fragile, but the history remains intact. So I think second learning in my view is history is very powerful. So don't miss history, please.
That's a good one. So you were driving your BMW to buy that last packet of Maggie.
That day I was driving Jaguar.
So you should have put Jaguar then. Okay, great. And really, thank you, Vikram. It's been a delight, absolute delight listening to you and your insightful,
thank you.
And I wouldn't say tips, your insightful sharing, and your insightful sharing of powerful takeaways, and you've graced our chat show. And I'm sure the viewers currently watching live and the other viewers watching post this live chat show would benefit a lot. If they have any questions, they could reach out to us at Outdoor Wilderness and Learning. And we wish you good health and hope to see you soon, Vikram.
Thank you.
Thank you once again from our entire team. Yeah,
thank
great you. Pleasure. Yeah.
Thank you, viewers. Thank you, Rajinder. Thank you, OWL. Stay safe. Thank you.
Yes. Yeah. Take care and wish you the best. Yeah. Bye.